Good afternoon. This is Clark Neighbors with BIS Weekly Market Update for the week ending March 14th, 2014. Just a summary for the week. Corn down a meager 3 cents. Beans down, old crop beans down about 65 cents. Wheat 30 cents higher. And those of you that don't follow the livestock trade too much, hogs, pork up $6 this week. And keep in mind, since the 1st of February, 5-6 weeks ago, the hog market has rallied $25. Cattle $2 higher since 1st of February, up $6. So keep in mind, the meat complex is at all-time highs, both recently on the hogs and the cattle. We'll talk on that in a second. As far as the grains this week, leadership fell in the hands of the wheat market. Continued talk of the Ukraine, Crimea situation with Russia. It continues to be a supporting factor in the wheat, also the corn to some degree. And with the weekend referendum coming up for Crimea to go back to Russia, that vote or the vote would be on on Sunday. So that could cause some interesting dynamics early next week. We'll see, depending on how that plays out. So that's a key thing to watch over the next few days. Now, looking at corn, for example, as a follower of wheat, and D's corn right now is about 50 cents off its lows from about less than 60 days ago. And actually, D's at 15 a year out, closed the day at 488. That's the highest close it has had since last October. Now, seasonally, market tends not to, longer term, tends not to make highs in this time frame. Usually going into the spring, we see a little more momentum. We'll see, because you enter that growing season time frame. But keep in mind, between now and the end of this month, you have the March 31st stocks, quarterly stocks report, planning report. There's going to be a lot of conversation during that time frame about supply. How big is the supply for next year? What are we looking at for acres? So that talk on supply may actually kind of limit the upside here for a bit. We'll see. Wheat rally has been, again, based off the Ukrainian situation, and also some concerns of the quality of the hard red winter wheat crop in the plains because of the drought, and potentially some winter issues with some of the soft red winter wheat. There was a meeting in Florida this week, and some were talking about the soft red winter wheat crop being down significantly this upcoming year. But giving the planted acreage estimate that came out in January, most of the trade was already looking for that type of number. Soybeans, still a lot of volatility in the soybeans. This week seemed like a week where the day the wheat was up, the beans were down, and vice versa. The talking point in beans is Chinese cancellations, whether those cancellations may come from here in the U.S. or cancellations out of Brazil. There seems to be more talk of cancellations out of Brazil this week, with supposedly 10 vessels that have been moved out or canceled, potential of 30 or 40 more. Also here in the U.S., the bean basis broke pretty hard this week, which would indicate maybe we saw about 15 cents in the CIF, which could indicate some cancellations here in the U.S. We'll see. Now, an interesting scenario in China is Chinese crush margins right now for soybeans are at basically 2-year lows. There's talk or rumors of some of the Chinese ports actually unable to unload soybeans right now because many of the facilities are full. Now, getting back to the crush margins, why are the crush margins so negative? Well, some of that is due to just cheap hog prices in China right now due to a surplus of pork. Totally opposite here in the U.S. And also talk of bird flu in China and also in South Korea. So throw that together, you got poor crush margins, cheap hog prices. Here in the U.S. we have, as I mentioned earlier, record hog prices with pretty good crush margins. Crushers still have pretty good margins here in the U.S. Lastly, as far as Brazil, they seem to be at a pretty good pace on shipments so far. They are a little over half done with harvest. The weights at the ports are there's still backups, but the weights are much less than a year ago. Some of that is due to not having a corn position in the midst of trying to move beans out. But some of these cancellations with China, that still is going to be the issue to watch over the next week or so as far as the front end of the soybean market. Those of you in the commercial side, we're having a meeting in Starved Rock next Thursday, March 20th, with Dave Toth and Chris Modoff, both of R.J. O'Brien. Dave's going to speak on the technical side of the market. Chris is going to give a pretty thorough background on supply and demand updates and what's going on in the world trade. We'll also discuss basis spreads, logistics, movement, flow of grain. And in that movement scenario, we'll continue to see just logistical issues, especially in the rail market. Big article in the Wall Street Journal today about the Burlington Northern Railroad having issues as far as shipping any product and being on time right now. A lot of that's due to the weather, and a lot of that is also due to the oil industry in the Balkan area of the Dakotas, taking away a lot of availability of not only power, engineers, but rail cars. So logistics, this point forward, are going to be very key. The river's in a very slow mode of trying to open back up on the Mississippi. We're going to be at least a week, if not 2 weeks late getting flow going there. And keep in mind, we've got a pretty good-sized export book on corn going forward. And I think the way that looks with the inability to rail to the West Coast and the river picking back up, I think the river situation is going to be a viable market here into the spring and summer. We haven't seen that in several years. So 3 things to watch the grains in the next week. One, obviously, is the continued situation with logistics. Also, your stocks and planning report out at the end of the month. Situation going on in the Ukraine and how that may affect wheat and corn indirectly. Also watch how that may affect energies. And then lastly, just South American weather and movement. Real quick note on the livestock, cattle looks like it traded this week at 151 to 152, which is up a couple bucks from last week, if not more. This meat market continues to be very impressive, both in the hogs and in the cattle, and it's surely based on numbers. With that in mind, as we go to our stocks report at the end of the month, you wonder if that reflects in stocks, bigger stocks, and potentially less feed usage. We'll see what the report brings. If you have any questions, call us at BIS Commodities, 1-800-373-2525, or our website, biscommodities.com, or keep in mind Twitter, BIS_commodities. With that, have a great weekend.